Ladies and gentlemen, good day and welcome to Sunteck Realty's earnings conference call for the Q3 FY22. We have with us today Mr. Kamal Khetan, the Chairman and Managing Director of the company, Mr. Manoj Agarwal, the Chief Financial Officer, and Prashant Chaubey, SVP Corporate Finance. Please note, this call will be for 60 minutes, and for the duration of this conference call, all participant lines will be in the listen-only mode. This conference has been recorded, and the transcript for the same may be put up on the website of the company. After the management discussion, there will be an opportunity for you to ask questions. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Before I hand the conference over to the management, I would like to remind you that certain statements made during the course of this call may not be based on historical information or facts and may be forward-looking statements, including those related to general business statement, plan and strategy of the company, its future financial condition, and growth prospects. These forward-looking statements are based on the expectations and projections and may involve a number of risks, uncertainties, and other factors that could cause actual results, opportunities, and growth potential to differ materially from those suggested by such statement. I would now like to hand the conference over to Mr. Khetan, the Chairman and Managing Director of the company. Thank you, and over to you, sir.
Thank you for joining Sunteck Realty third quarter FY 2022 earnings call. Hope each one of you and your family are safe and healthy. Over to the previous quarters, I have introduced yourselves to the guiding principles of the new Sunteck, what we are calling 3.0. Sunteck 3.0 is focused on 3 key priorities: maintain a strong balance sheet and strong cash flow. Second, continue to do marquee acquisitions in line with our business development strategy. Third, building an exceptional team. Given our strong balance sheet, high brand recall, and strong execution of projects, both our pre-sales and collections are registering healthy and rising growth on a sustained basis. This has also enabled us to grow our business and fiscal prudence by maintaining net debt equity ratio at sub 0.25. In the last 18 months, through excellent cross-team coordination at the organization level, we have succeeded in acquiring approximately 23 million square feet across MMR. This has enabled us to double our growth engine from 3 to now 6, namely BKC, ODC Goregaon West, Naigaon, Vasai West, Kalyan, and Borivali West. We have close to 36 million square feet of development portfolio now across all these 6 locations. All these locations give us a clear visibility for the coming 7 to 8 years. The strong project pipeline has allowed us a slew of launches over the next 12 to 18 months across all segments. We are confident that these launches will scale up our pre-sale to achieve the next leg of growth for Sunteck and continue to witness rising market share. There is a continuous flow of business development opportunities that we are currently evaluating. Our endeavor is to capitalize on our strength of business development and do similar acquisitions, taking our portfolio from current 50 million square feet to approximately 70 to 75 million square feet over the next 18 to 24 months. We are not just focusing on our pre-sales growth, but profitable growth. We have achieved an average EBITDA margin of 35% in the last 5 years. Going forward, we are looking at upward of 35% margin from our current portfolio. Last but not the least, I'm very proud of the team that we have built at Sunteck in last 15 years and focused on strengthening it further. Thank you. I will now hand over the call to our CFO, Mr. Manoj Agarwal, for his comments. I would be happy to answer thereafter your questions, if any. Over to you, Manoj.
Thank you, sir. Good evening, everyone, and thank you once again for joining us today and take out your valuable time for Sunteck. Hope all of you are safe and well. The financial and operational numbers has already been published on the stock exchanges. I believe all of you must have gone through the same. Now, I would like to highlight the key financials and business performance numbers. Starting from the pre-sales, our pre-sales grew up by 29% on Q-on-Q basis in Q3 FY22 to 352 crores compared to rupees 272 crores in Q2 FY22 and 1% year-on-year basis from rupees 349 crores in Q3 FY21 last year, same period. Collections grew up by 30% on quarter-to-quarter basis in Q3 FY22 to 272 crores compared to rupees 207 crores in Q2 FY22 and 7% on year-on-year basis from rupees 250 crores in the last year. For the period 9 months ended FY22, the pre-sales grew up by 23% on year-on-year basis to rupees 800 crores compared to 151 crores in the last year. Also, the collections grew up by 41% on year-on-year basis to 649 crores compared to rupees 459 crores in the comparative period last year. With respect to the financial highlights, we have reported a consolidated revenue of rupees 128 crores in Q3 FY22 compared to rupees 136 crores in Q2. On 9-month basis, the revenue for FY22 stood at rupees 357 crores compared to rupees 419 crores in the comparative period last year. The consolidated EBITDA for Q3 FY22 is rupees 35 crores compared to rupees 37 crores in the last quarter. EBITDA for 9 months stood at rupees 92 crores compared to rupees 98 crores in the last year. During last 9 months, we have taken 50% concessional benefit on premium and approval payments and paid rupees 222 crores in advance to get the benefit of the same. We can now open the forum for questions from the participants. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may we request you to rejoin the queue. The first question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good performance. My first question is with respect to land acquisition. You talked about acquiring 23 million square feet of land since pre-COVID. Why do you see a need to acquire more land, and how different are the land prices or the terms of agreement versus what you did during the pre-COVID and the COVID period?
So, Puneet, good evening. So we have obviously, why do we need land for acquisitions? Definitely, this is a raw material for us, and we continuously need that to grow the company. I don't think we cannot survive if we don't have a proper land acquisition strategically on right time. And this is looking at the timing, obviously, where the consolidation is taking in the industry. I think it is the best time to do acquisitions, and that too at the asset-light model and with the better terms than what we would get obviously before pre-COVID.
Okay, so you're saying the terms are better than pre-COVID even now, and versus the COVID period, are the terms equivalent or worse or better?
It is better. It is better.
Even when you look at the COVID period of 2020 and 21, the deals which are sitting on negotiating are better than 20 and 21.
Yeah. So we are, I can say if not better, they are similar. but not as bad as a pre-COVID level when there was like everybody or anybody was there. So we know that a lot of consolidation is already taken in the industry, and that has only given us a edge because the few players are left, very few players we all know, and that's where organized and listed players are definitely getting that benefit.
Okay. And in terms of this land acquisition, what kind of land parcels are these? Do you have to? Are there auction land parcels, or do you have to do JVs, or are there slum and / redevelopment, business redevelopment potential as well?
So Puneet, we definitely don't do any slum redevelopment, and we have not done any redevelopment projects as well. Okay. These are all JDA's asset-light model with most of the landlords, and it is there in the public domain. And I think if you must be tracking Sunteck, all these deals are there in the public domain.
Understood. That's helpful. My second question.
Mr. Puneet, so sorry to interrupt, but for any follow-up, may we request you to rejoin the queue, please. The next question is from the line of Kunal from CLSA. Please go ahead.
Yeah, good evening, Kamalji. So my first question was on the BKC sales. So in the last 9 months, we haven't seen much happening there. So going forward, what will be a strategy to revive sales here, and what is the monetization timeline that we are looking at here?
So Kunal, definitely we are concerned about the BKC sales going slightly low. But one thing is you have to understand at one point of time, Sunteck was doing almost just 2 years back. In fact, 60 to 65, 50 to 60%, 2 to 3 years back, 50 to 60% of the sales would be from BKC. So our dependency on the BKC sales have in fact gone down. At the same time, nevertheless, that we cannot forget. We know that we cannot forget doing sales at BKC. So we are finding out we are doing different strategy, and we see very frankly right now some action going forward from in this sector, especially in BKC project, and we'll see some improvement in the sales from this project.
Okay, sure. And sir, on your slide 27 of your presentation, so you've given the timeline for the new launches. I wanted a particular update on Borivali project. Can you give us an update here? When do you expect the site to be handed over and then submit the plans for approvals and the final launch? Because we acquired this project in March 2021, and we are expecting the launch to happen in FY24. So just trying to understand what is happening here.
So obviously there is a registered definitive document with the landlord. And it's a JDA model. So it is a landlord prerogative to get approvals as per the agreement. So he has to get the approvals. We are seeing that approval, the way the approvals are moving. So there are obviously, we know that there are a lot of approvals before we start the projects. So we are not expecting all these approvals to come before the end of 23, financial year 23. So that's why on a safer side, we have tried to show that the launch which we expect during the financial year 23-24.
Sure. Thanks, Kamal.
Thank you. The next question is from the line of Adhidev from ICICI Securities. Please go ahead.
Yeah. Good evening, everyone. Thanks for taking my question. So just a couple of questions. Firstly, sir, we have done around 800 crores in 9 months this year. So any guidance you'd like to share for this full year? And for FY23, for the 1800 crores guidance you have given up, could you break it up into how much would come from ODC, Naigaon, BKC, means the projects which you already have, plus how much would come from the new launches which you plan next year? That's it. That's it from my side. Thank you.
So, Adhidev, thank you so much for asking the question. In terms of the target for FY22, we are targeting close to 1,300 crores of pre-sales for the entire year of FY22, right? In the fourth quarter, that is the quarter which is currently ongoing, we have launched our third phase in Naigaon, which is Sunteck One World. and the kind of response that we are receiving is quite encouraging. So that gives us confidence in terms of achieving 1,300 crores for the current financial year. In terms of FY23, in slide 27 of our presentation, as you can see, we will be launching close to 3.35 million square feet of portfolio. So that portfolio plus the foundation, plus the sales from other ongoing projects that we already have, we are very confident that we can achieve 1,800 crores of target that we have given in our presentation. Thank you, Adidev.
Okay. That's it from me.
Thank you. The next question is from the line of Venkat from Tata AMC. Please go ahead.
Hi, sir. Am I audible?
Yes, you are audible.
Yeah. Thanks a lot for the opportunity. Sir, my first question pertains to the sales figure. So basically, we had initially guided for around 1,500 odd crores in FY22 and FY23, 22 billion. So any reason why we are kind of, revised it kind of downwards? And then again, the way that we are kind of adding to our gross development value, the conversion of the same isn't reflecting in terms of our pickup in sales, right? So how should we think about this?
Yeah. Good evening, Venkat. Venkat Kamal Kitania. So what we are talking about, the revision, very frankly, we were looking at upwards of 1,300 crores. But as we know that there is always an uncertainty of getting the approvals. So we were looking at least one new launch from the new acquisitions that we have done, let's say like Vasai or Kalyan. But definitely the approvals have not come in line with what our expectation was. So we are definitely looking, we have missed this quarter. We will miss this quarter for the approvals of one of these projects. So we are really confident those approvals will go to the next quarter. And hence, that's why we had to, maybe we were looking at 1,300 plus pre-sales, but right now that's why we want to restrict it to 1,300.
Right. So, sir, if the approvals are slipping to the next quarter, ideally what you were originally guiding for FY23, there should be some upward revision or at least, reinforcement of that guidance, right? But again, when we look at FY23 numbers also, they are kind of revised downwards. So what exactly are we missing here?
So Venkat, very frankly, we are very clear that 2,000 crore achieving that, we don't want to revise next time. I would put it that way. There are always some uncertainty, we all know. If we are getting any new project started, there are a lot of approvals which is required in this segment, in real estate sector. So as a sector, so we know that uncertainties are always there. So we want to be conservative. I can guarantee that if all the approvals are in line and what we are targeting this time, the approvals of the project which will be launched in next financial year, FY22-23, we will definitely see not only 1,800, maybe about 2,000 crore, but at the same time, on a conservative side, we want to give a guidance of 1,800 crores, so we don't need to revise downward next time.
Right. Sure, sir. Thanks for that update. I mean, one request is whenever you are guiding to the markets, if you could please take that conservatism into consideration whenever you are guiding, because obviously you would be the person who would best know about this business, right, versus the investors. So that's one request I would want to place on record. And my second question is, and there is a request to this as well. With respect to the way that you are planning your investor presentation, if you could make it more consistent, because in this quarterly presentation, we don't really see a walk down of the cash flow, right? Which is really important for the investor to understand, because that's the single most important metric that investors would like to look at. So if you could kind of incorporate that in all the future presentations. And just as a continuation of that, could you help us understand, what was the collection, what were the spends different type of spends, and then the net debt figure at the end of Q3 FY22.
Hi, Venkat. This is Prashant this side. Trust you are doing well. So Venkat, we have tried to better the presentation and make it more investor friendly. We are happy to take your suggestions, and from next time onwards, we would incorporate all your suggestions. Thank you so much for being candid with us. As far as the cash flow is concerned, Venkat, as you are aware, we have done 800 crores of pre-sales in the current 9 months, and the breakup of the pre-sales is as follows. In the luxury segment, we have done in the luxury segment we have done in the third quarter we have done 77 crores of pre-sales. In the mid-income segment, we have done 139 crores of pre-sales. In the affordable segment, we have done 111 crores of pre-sales, and the balance comes 25 crores we have done in our ongoing commercial projects. So that translates to 352 crores. In terms of collections, Venkat, in the third quarter, from the luxury segment, we have collected 115 crores. From the mid-income segment, we have collected 123 crores. From the affordable segment, we have collected 119 crores. And from the commercial segment, we have collected 12 crores. We take your point, Venkat. We will try to incorporate this in the presentation as well. Thank you so much.
Thanks a lot. Wish you all the best.
Thank you. The next question is from the line of Parvez from Edelweiss Securities. Please go ahead.
Yeah. Good evening, sir, and thanks for taking my question. So 2 questions from my side. First, what is the kind of inventory that we have currently in the ODC project? And second is with respect to the Naigaon project, have we launched the entire 1.25 million square feet in the third phase that we were targeting to launch in Q4? And what is the pricing that we have kept for this phase 3? Thank you.
First is inventory in ODC.
Parvez, can you repeat your question, second and third?
So the first question is, what is the kind of inventory that we have in the ODC project currently? And the second is, in your opening remarks, you said that we have launched the third phase of Naigaon project. So have we launched the entire 1.25 million square feet that we were planning to launch in Q4 in Naigaon phase 3? And also, what is the pricing which we have kept in this phase 3 for Naigaon? These are my 2 questions. Thank you.
So coming to your second question, the Naigaon phase 3 has been launched in line with what we were looking at, and the pricing is similar to what I would say pricing is similar to the market what we are selling the current products at. So it is at the same in line with the existing sales which is happening.
Great.
And the first question, Prashant, can you give the inventory?
Hi, Parvez. So with regards to the inventory at ODC, I would like to break it up for you from currently ongoing and the future. So in the currently ongoing, Parvez, we have close to 1,000 crores plus of unsold stock which is available with us across 4th Avenue, Sunteck City 1st Avenue, and Sunteck City 2nd Avenue. This is because in the 1st Avenue and the 2nd Avenue we have got extra approvals. So because of that, there is a generation of new inventory. Secondly, in our upcoming projects in ODC, we have a total inventory of plus 5,000 crores. So that is the breakup of inventory for you, sir.
Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Pritesh from Motilal Oswal. Please go ahead.
Hi, sir. Good evening. Thanks for the opportunity. Just on the launches, so the ODC launches that we are planning for FY22-23, these are going to be the new avenues, or these are going to be the higher floor inventory which you are planning to launch?
So yeah, Pritesh, it will be a combination of higher floors and the new tower launch.
So new tower launch will happen in 22 or 23 or 24?
I can only say that the total put together, we are looking at the launch area of close to 0.6 million square feet, which will be from, because as we discussed in the past, one of the questions that there are always uncertainty in getting some approvals. So we are confident that at least 0.6 million square feet we will be able to launch, taking the combination of new tower and higher floor launches put together.
Sure. Got it. I think that's it from my side. Thank you.
Thank
All
you.
the best.
Thank you, Pritesh.
Yeah.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Mohit from Leverage Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is essentially on Avenue 1. While you're talking about the higher floors, etc., when we do channel check, we understand that for even the existing ones, the amenities is not ready. The gym is just about 400 square feet between 440 odd flats. So how do you plan to sort of really scale up your luxury project? And in light of that, do you want to do more luxury projects, or you think management capabilities lies best in Naigaon, Kalyan, etc.? Thank you.
Mohit, I don't need to explain the capability of Sunteck. Sunteck has started the journey with BKC Signature Island project. I don't know your market sources from where you have got this feedback, but as far as today, I can proudly say there are some of the best corporate people are staying in our projects in BKC. And we are pretty confident. In fact, Sunteck is known for the luxury, and whether it is maybe in a uber luxury segment, or in the mid-income premium segment, or maybe in the affordable segment. So we'll continue to command luxury, and we continue to command premiums across all our projects. So sorry to say that if you think that Sunteck would be only doing affordable, I don't think we would be getting so many of BD development projects on a asset-light model where the landlord is trusting Sunteck with his land property, which is worth like close to 1,000 crores, 800 crores. So I don't know where you have got your channel checks done from. Thank you. Thank you.
Thank you. Thank you. I would now like to hand the conference over to the Chairman and Managing Director, Mr. Khaitan, for closing comments.
Thank you all for taking out the time from your busy schedule today. In case if any of your queries have been left unanswered, you can get into touch with me or my team. We look forward to your continued support. Thank you once again for joining us today, and please be safe. Thank you.
Thank you. Ladies and gentlemen, on behalf of Sunteck Realty, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.